Why the Chinese crackdown is beneficial to cryptocurrency in the long run. There are multiple reasons why China's crypto crackdown is beneficial to Bitcoin and other cryptocurrencies. China's new restriction on Bitcoin mining may have led to current market downturn, but in the long run, this may have some unexpectedly good consequences. China has issued crypto prohibitions since 2013, but this ban may be a blessing in disguise, as officials have shut down Bitcoin mining in various areas. The Chinese central bank has also restated a previous prohibition on banking and payment organizations offering any services linked to cryptocurrency transactions. Initial coin offers, ICOs, are still unlawful. This may appear to be awful news, but take a step back. China has been at the forefront of outlawing numerous technological breakthroughs, but that hasn't stopped them from gaining control of the world we know today. Twitter, Facebook, Google, and other widely used services all have one thing in common: they have all been blocked by China at various times. In fact, China prohibitions have proven to be a good purchase signal. I believe the Chinese authorities made an enormously costly error with this ban, says Sean Sanders, CEO of crypto investment platform Revix. It is now evident that Chinese Bitcoin miners are migrating to other parts of the world where Bitcoin mining is more welcome. There is a silver lining to every cloud. Due to cheap energy prices in locations such as Sichuan, China accounts for more than 65% of all Bitcoin mining in the world. This raised fears that Bitcoin mining was overly concentrated in one region of the world, exposing the network to the possibility of outages and political meddling, which is exactly what happened. Many Chinese Bitcoin miners are going to North America or Kazakhstan, where electricity is cheaper and regulations are more receptive. Sanders points out that earlier Chinese efforts to restrict Bitcoin have been counterproductive. When Chinese authorities declared plans to ban cryptocurrencies in September 2017, Bitcoin's price plunged from an all-time high of just above $5,000 to roughly $3,000, only to quickly reverse course and reach a new all-time high of $20,000 by December of that year. What this illustrates is that while governmental intervention may have a short-term influence on price, the fundamentals driving Bitcoin's price remain largely unaffected, Sanders adds. We've seen this many times over the years, when officials threaten cryptocurrency limitations, but more lately, we've seen a more balanced and rational approach to Bitcoin from authorities in other nations like El Salvador, where Bitcoin is now accepted as legal tender. Bitcoin mining entails solving complicated mathematical riddles in exchange for new Bitcoin. As Chinese miners shut down operations while shifting elsewhere, the overall pace of mining, as measured by the hash rate, the processing power necessary to produce Bitcoin, has dropped by more than 50%. According to a recent Bean crypto analysis, while Bitcoin hash rates and active addresses have been declining since reaching an all-time high of $64,800, the network is still seeing user growth, which is accompanied by an increase in long-term holders and a decline in Bitcoin liquidity as demand rises, which could signal a reversal of the downward trend. Another piece of good news for Bitcoin was the announcement that Morgan Stanley had purchased over 28,000 shares in Grayscale Bitcoin Trust, which allows institutions to gain exposure to Bitcoin through share ownership rather than outright purchase of Bitcoin. Morgan Stanley's latest step demonstrates the mainstreaming of cryptocurrencies, and more financial institutions will undoubtedly follow suit. With the recent price dip in Bitcoin and cryptocurrencies in general, we have seen buying enter the market with the idea that the bull market has not yet run its course, Sanders adds. This is an important lesson on the volatility of cryptocurrencies for people who are new to them. For those who have gone through prior downturns, this one is not particularly concerning, and is instead viewed as a chance to buy in at a cheaper price. An easy way to get started with cryptocurrency. Revix offers 3 equally weighted bundles in addition to the possibility to purchase Bitcoin and Ethereum as individual crypto assets. These bundles allow you to easily invest in the most popular cryptocurrencies at a reasonable cost with a single investment. The Top 10 bundle provides investors with diversified exposure to the top 10 cryptocurrencies based on market capitalization, with each cryptocurrency receiving a 10% weighting in the portfolio. Your bundle is rebalanced on a regular basis, keeping you up to date with the volatile market without you having to lift a finger. It contains the cryptocurrencies Bitcoin, Ethereum, Cardano, and Polkadot. The benefit of this bundle is that it provides exposure to new and developing cryptos that frequently beat Bitcoin's already exceptional compounded growth of 117% per year over the last 10 years. This bundle's price has increased 454% in the last year, much outpacing Bitcoin's 192% increase. The Smart Contract Bundle invests in the top 5 cryptos, with an emphasis on the upcoming smart contract technologies. A smart contract, like a contract, allows the conditions of an agreement or trade to be carried out. However, what distinguishes it as smart is that it can carry out this transaction without the involvement of a third party. Many people believe that this is where cryptos and blockchain technology will go in the future. Over the last year, the Smart Contract Bundle has outperformed Bitcoin. The Payments Bundle focuses on 5 cryptos that aim to revolutionize money and value transfer. It consists of Bitcoin, Ripple, Litecoin, and Stellar. This bundle's worth has increased by over 240% in the last year. Your crypto bundle is then rebalanced automatically each month, keeping you up to date with the volatile market without you having to lift a finger. This ensures that investors always possess the most popular and trustworthy cryptocurrencies that represent the whole market.